angel of death and tax avoidance. I'm here to talk with you about a diabolical tax loophole that the super rich use so their children can dodge taxes. Now, ordinarily, if you buy $1,000 worth of stock and later sell it for $10,000, congratulations, you've made money. Of course, you'd need to pay capital gains taxes on your $9,000 profit. Or alternatively, you could die. With the stepped-up cost basis loophole, it doesn't matter how much you bought that stock for. When you die, its value is stepped up to its current value at the time of your death. When your children inherit the asset, they can turn around and immediately sell it without paying taxes on the gains. Or instead of selling it, they can borrow against it to fund their luxurious lifestyles and still pass it on to their heirs, also tax-free. The loophole eliminates capital gains taxes on property, too. So while the ultra-wealthy can't cheat death, they can use death to cheat taxes. This tax-dodging scheme is affectionately known as the buy, borrow, die strategy. And this is one way dynastic wealth grows over the generations. For example, it's how robber baron Andrew Mellon's fortune was eventually passed down to his grandson, Tim, to help enable Tim to become a major political donor. By the way, the richest 1% of Americans own half of all individually held stock owned by Americans. Closing this loophole for heirs of the ultra-wealthy would raise more than $100 billion over the next decade. Money that could be used for child care, elder care, to fight the climate crisis, or help pay down the national debt. And don't feel too bad for the children of billionaires. They'll still have lots of money to ensure they'll never have to work for a living. They'll be in the lap of luxury until, well...